So I'm a multimillionaire, and most of that money in my net worth is crypto, but I also do hold a significant amount in stocks. So in this video, I'm going to share my main crypto and stock positions through both of my portfolios, my thoughts on each of those positions, and my plans for the rest of this year. Let's get into it. First in the crypto portfolio is, of course, Bitcoin, which makes up about 80% of my entire crypto portfolio. And, given the way last year went and the way that this year has gone so far, I am very pleased with my decision to have Bitcoin make up so much of my crypto portfolio. I consider Bitcoin my foundational layer. I would highly recommend. I've said this so many times on the channel. I say it in Sleep Money Club, my private premium crypto membership, all the time. You really need to have a foundational layer to your entire investment stack. For a lot of people who don't want to investigate the world of crypto and Bitcoin, maybe that's the S&P 500, an index fund, or maybe it's partly that, partly Bitcoin. But in the world of crypto, Bitcoin is truly the only thing I really, really believe in long term. What does long term mean? I mean, like 5, 10, 20 years from now. 99.9% of everything else in this market will most likely go to zero. There's some exceptions there. I hope we can find some exceptions. Hope I can invest in a few of those exceptions. But Bitcoin, it's the one with a proven track record. It's the one that has the momentum and the moat. And so I'm very pleased and proud to have it as such a large portion of my portfolio. And looking at the chart, especially year to date, it looks a little bit, if we zoom all the way out and we can see where we were at our all-time high in October of last year, we've had a pretty rocky road since then, with especially a rocky day on February 5th, which was that huge, massive liquidation event this year. And likely very close to the bottom for this year in this cycle. We can, of course, go lower. I mean, a lot of people on X calling for $40,000 and $50,000. Maybe we see it, but on the chart as I look at it so far, we hit 62 and some change, just under 63,000. And the past 3 months, I mean, the chart just looks really good. This, of course, could change. I'm watching this every single day. But I would not be surprised if if we have found our local bottom this year. Regardless, I'm constantly doing my version of dollar cost averaging into Bitcoin, which is mining. I'm currently mining about $4,000 to $5,000 in just raw revenue of Bitcoin each month. Of course, I stack it all 100%. I pay out of pocket my electric bills, which are about $3,500 a month. So I've got that, net profit, but it doesn't matter to me. All that matters to me is how much I'm actually stacking, which is between 4,000 and 5,000 a month right now. With my latest machine bringing in about $560 a month in just total revenue. So not only is Bitcoin my biggest position in my portfolio, but I'm stacking another 4 to 5 grand worth of it every single month, which is 0.059 and some change Bitcoin. Of course, if you did see my video on my latest miner purchase, you'll know that I have now stepped into the hydro mining game, thanks to my friends over at Musk Miners. And I just want to note this, if you were looking at getting into Bitcoin mining and stuff, you want to watch that video, definitely go check that video out. But especially if you're looking at getting into hydro, they have a pretty killer sale going on right now, like $250 each unit, or $500 each unit if you buy more than 10, plus as an extra your friend Andy discount of $100 per unit. On top of that, just as an aside, they didn't sponsor this or anything. I'm big fans of Musk Miners. But anyway, regardless of where we go next, and given that this is such a big position of mine, part of my thesis is just that this cycle, whether this cycle we've started a new cycle, or whether it's a continuation of last year, and that cycle continuing in past the 4-year cycle mark. I'm seeing $150,000 to $200,000 Bitcoin that I'm looking forward to, in the more short term, the 6 months to 18 months from now. But long term, my thesis is unchanged. I've said this a million times at this point, but my thesis is $1 million Bitcoin or more. Ultimately, I think something more like a gold parity, which would be like $1.6, $1.7 million Bitcoin, is in the cards for us. But either way, That's what I see for the future. Position number 2 in the crypto portfolio, if this is now my largest altcoin position, is Geodnet. For those who are not familiar with Geodnet, if you've watched the channel, you should be, because I've covered them quite a bit. They are a company, a DePIN, a decentralized a physical infrastructure network crypto project centered around global positioning data, GPS, GNSS. They do very precise RTK data, which the data they're able to get, instead of the usual 10 feet of accuracy that you get with GPS or global positioning satellites, they get it down to the millimeters or centimeters. And it turns out this data is extremely sought after, in demand, and lucrative, because they are currently making $10.27 million in annual recurring revenue. As these markets have matured, real revenue has been something that I've been looking at as a major indicator and fundamental that's important to me. And Geodnet has that in spades, and it just keeps growing. They also have a fantastic team. I've had the main guy behind it, Mike Horton, on my podcast and on the channel, and just the rest of the team is just kicking ass and doing great things. Not to mention, if we look at the past year, they are down 44% token price, but compared to so many other altcoins that are down at 90%, 99%, they've held up fantastically well, down 44%, which isn't great, but still, Bitcoin's down 36% as of right now from its all-time highs. So I will call this a win. In my estimation, just from what how I feel about this, from the fundamentals that I see, and my kind of thesis around the price action for this is that I feel the more money I put into this, the outlook is an easy 10 to 20x. We can finally get to an alt season and a bull run. So this is one that is currently my largest altcoin position, but I am continually adding more to this, and I'm going to be adding more very soon. Okay, next up is Flux. Used to be my largest altcoin position. Now it is my number 2 largest altcoin position in my portfolio, but this is one I've had for quite a while. And let me just say this. I am still a fan of Flux, still running Flux nodes, still like the general idea behind it, especially with AI being all that anyone can seem to talk about these days. But, and it is a big but, I find it increasingly hard to describe what they do. Like, I can still say they're a decentralized, Amazon Web Services, more or less, and there is still that big part of the business. But it also just seems like they do everything. Every kind of thing they can pivot towards or build out or whatever, it just seems like they jump all over the place. So that would be, a friendly critique from your friend Andy on why my interest has waned a bit. They just have their hands in so many things. One of the things I look for in one of my investments is a clear focus and direction. And maybe they can articulate that, and I just haven't been hearing it. I don't know. But the other big thing for me was just watching the price. In 2023, if we zoom out here, we go back to 2023, they got down to the 30-cent range. And keep in mind, this is, August of 2023. This is the lowest point of the bear market from last cycle, and they hit 30 cents. Well, zoom out to today, and they're at 8 cents. So, and they were actually much lower about a month ago. Yeah, I got down to this cycle low, I guess, of 5 cents. And when you take into consideration, all my original mining revenue from this and the amount I've actually bought, my average cost basis is somewhere around 2 cents. So I'm still up, even when they were at 5 cents. But seeing it get that low, when there's so much excitement around AI and various things, and when there's so many crypto projects that are, that I have in my portfolio now that are showcasing their revenue, like Geodnet, I just showed $10 million in annual recurring revenue. And, seeing this price action, it's harder for me to have the same conviction that I, once did. So for that reason, I have in the past, and I will say I'm also just grateful for being involved and invested in Flux, because I have made a lot of money over the years with Flux. I've taken a ton of profits, but as with all things, and I'm sure all of you can relate, I wish I had taken even more. And kind of looking at it now, I'm thinking, well, I would probably like to rotate some more of this out and move it to higher conviction positions in my portfolio. So I've done a little bit of that lately. I'm just watching the price right now to see if it runs up a little bit high, faster than one of my other ones, and then I can sell a little bit out, sell off a node or two, and then rotate that capital somewhere else where I have higher conviction. Of course, with all things on this list, it's all in flux. It's all constantly under evaluation. I'm constantly making changes to my portfolio. Next in the portfolio is Kaspa, number 3 largest position I have. And just right off the bat, let me just state that I'm probably going to be scaling out of most of my Kaspa. I'm glad in the past that I've taken some of the profits I did. Another one where I wish I had taken more. But just as I've seen the narrative evolve and what this next cycle run up is probably going to look like, I just don't see a strong narrative. I'm not convinced that there's going to be a strong narrative around a pure layer 1 play, which is what Kaspa is. I think some layer 1s like Solana, which I'll get to in a bit, will do really well, but their narrative will be all the things being built on top of them, which Kaspa has a few things, but largely not very much. I think it's a fantastic blockchain. I love how fast it is, how cheap it is to transact. I like the the grassroots movement behind it. But as large as it is in my portfolio, the way I feel about it, I just would rather have most of this money I have currently in Kaspa in other places. Plus, just mining with it didn't go as well as my Bitcoin mining or my script mining. I am basically at break even on all my mining profits and stuff after all my machine purchases, but like just break even. So that's where I'm at with Kaspa. Next in my crypto portfolio is Solana. This is one I have dismissed in the past, and one I wasn't really planning on having as one of my top 5 in my crypto portfolio at this stage. But I've changed my opinion on this one in a number of ways. One, it's just remarkable, like how far they've come. They're absolutely one of the top chains out there, one of the top layer 1s. They only continue to dominate and have adoption. There's just an absurd amount of stuff that's been built on Solana up until now, and there's a ton being built on it right now and into the future. But one of the biggest reasons I shifted mentally on Solana is that so many DePIN projects that I'm a big fan of that have real revenue and real business ideas, and they're like an actual functioning business in the real world, have all migrated or are on Solana. Seems to be the chain of choice for DePIN, and so I've been buying Solana, and I feel like in a good bull run, if we do get that, a price target of anywhere from $700 on the lower end up to $1,000 to $1,200 on the higher end, maybe even higher. I don't know. Seems reasonable. So watching this do a 5 to 10x plus as a kind of a blue chip, quote unquote, crypto seems pretty good to me. Plus, I've built an entire strategy around Solana. Now, I've talked about this on the channel a few times, but I really wish more people would pay attention to this, because I think there's a huge advantage if you have like kind of the structure around something like this built and functioning for you in the right way. And what I do is I'm using I Trust Capital. There's other ways you can go this route, but having a tax advantaged vehicle to buy certain assets within. I've chosen mostly Solana for this. I Trust Capital, for those who don't know, they let you open up an IRA like a Roth IRA or a SEP IRA, which is what I do through my business. In the case of a Roth IRA, lets you buy stuff inside of it, and if it goes up in value and you sell that stuff inside the Roth IRA, you pay zero taxes, zero capital gains taxes. It's a pretty incredible thing to do with your crypto holdings. And so I've been using my IRA to buy Solana and also stake my Solana inside the IRA and get those staking rewards also tax advantaged. And of course, you could buy just Bitcoin inside of this, or if you're an Ethereum person, you can do that and stake Ethereum. You can also do USDC and get rewards through that, or do gold and silver, actual precious metals. This summer, they're going to be adding stocks. My plan is, and there is a link to iTrust Capital in the description. It gives you $100, a nice bonus when you open your account. My strategy around this is I'm buying Solana right now inside my IRA with iTrust Capital. I'm staking it, so I'm earning additional as I buy more. And because I'm doing this through an SEP IRA, whenever I put money into this IRA to buy Solana, I actually get a deduction on how many taxes I owe to the U.S. government, which is a pretty cool little additional advantage. But when Solana goes up to 500 plus, 700, 1,000, whatever that is going to look like, I'm going to scale out over that price spectrum. I then get to enjoy those gains I made in a tax advantaged way. But then I have the opportunity to either hold cash and wait for the bear market and then to rebuy these assets, rotate it over into Bitcoin, or buy Solana again if I want for the next cycle. But this is also really interesting and worth a consideration because they, like I just said, they're going to start offering stocks inside of their IRAs this summer. So let's say later this year or it's beginning of next year, we have the big bull run. I scale out of Solana, I have all that cash. I can rotate that into the S&P 500 and just enjoy those gains rolled over into S&P, and then truly just forget about it until retirement age. There's a lot of really cool options with this, which is why having a account structure matters so much. If you've never considered something like this for some of your crypto, you should. They also have a premium custody account, which is more like a brokerage account, I guess. If you don't want to deal with like cold storage and stuff, it's all institutional grade. And then they just started offering this treasury account. So if you have a business, you can start your own Bitcoin treasury. So that's a strategy I'm doing right now with my Solana holdings, which has been growing and growing as I've been adding more and more. Next in my crypto portfolio is Doge. I've mined 100% of my Doge position. It is the best meme coin. I feel pretty confident in like $1 Doge whenever I get to a bull run. My miners I have on Doge are by far my most profitable miners. I should have gone heavier on script miners, but at this stage I am fully satisfied with my Dogecoin position. Basically my only, like one of my only meme coin plays, just around the narrative that eventually people will want to play in that space again. But I've stopped mining Doge directly. I'm mining Doge, but I get paid out right now in USDC. And I'm using PowerPool for that. There's a link down below for PowerPool. So I'm satisfied with my bag of Doge. Happy to ride that into the next bull run. But all my Doge revenue now is converted to USDC straight to my wallet to fund my other positions. The next position in the portfolio is Grass. For those who don't know what Grass is, they scrape web data for AI purposes. In the past year, they've done about $33 million in revenue. They also just have a fantastic name. A lot to be said about the fundamentals like revenue, etc. But there's also a lot to be said about, is it easy and memorable to think about? Does it have a certain aesthetic that you can see retail people especially getting behind? And it does. So Grass is now much higher up my portfolio stack. Of course, they have an airdrop, another one coming this year at some point. If you're not in that, you really should be. There's a link down below for the to sign up for Grass and get involved and get a piece of the airdrop. And the big reason for holding Grass is all the things I just mentioned, but also again AI. This I have a feeling is just going to dominate this next crypto cycle, and Grass is right in the thick of making money with AI. So I want that exposure in my portfolio. And if you do click that link for Grass down below, it is a referral link, but it's not my referral link. For those who are not familiar with or don't know about Sleep Money Club, which is my premium crypto membership. One of the perks is I pick people in the club to take their referral links and swap them out with my own. And then when I do videos and I pitch the referrals, well, Sleep Money Club members get those referrals, and Grass is one. We've done a lot of those. I've sent thousands and thousands of referrals to Sleep Money Club members, and we'll continue to do that stuff. But also just a bunch of passive income guides and strategies, just tons of courses and other guides, and plus just a great community of people who are looking for interesting plays and investments out there. We're constantly talking about that type of stuff, including a brand new one I just posted about that's got some potential that hopefully will be really big. Next in the crypto portfolio, 375 AI. This one, they currently have about $2 million of revenue. This is decentralized edge data, like intelligence network. So they've got a bunch of phones out there, which is where you can get involved. You can sign up with the link down below and use your phone as a sensor. But they also have other devices and sensors out in the wild. They're taking all this kind of real world data from microphones and cameras, using this for stuff like AI training. So again, an AI angle here. I'm constantly looking for the AI angle. They've made $2 million in revenue. They've raised $10 million in funding. They have like real world camera and sensor systems out there, stuff like cameras and sensors on billboards in high traffic areas, so they can get vehicle and pedestrian movement and stuff for AI training. So this one's really interesting. This is one I just started buying a few months ago, and it's already done pretty well. Next on the list is NTMPI. I've been talking about NTMPI for a long time. And if you missed the big news with NTMPI, they did recently merge with Mask. I'm sure some of you are familiar with the Mask browser. So Mask browser is a private browser. They get their own decentralized VPN and all kinds of cool Web3 features built into the browser. And then NTMPI, who is a data company building the world's largest decentralized data index, and they've also now built and released a search engine, a decentralized, unbiased search engine, which is in beta. Still pretty rough around the edges when it comes to results. They're working on it. But if you want to go try it out, you can just click this big button in the middle. They merged with Mask, so now NTMPI is kind of, you can see them as the enterprise arm of the company, and then Mask is the consumer arm. So NTMPI is going to be out there trying to make these big data deals with companies, and Mask can be building the consumer-facing stuff and focused on that, which is all pretty good. However, this used to be a lot higher in my crypto portfolio. The market cap is currently $244,000, and the price action over the past year, if you really zoom out, has been pretty bad. So NTMPI is one that still portfolio positions by size. I still do love what they're building. I love the teams behind both of these two companies that have merged. But I'd be lying if I said it didn't provide some trepidation to see just how far price has fallen and wondering, can this recover? Of course it can. I've seen things in worse position blow up in the right conditions, but the lower something gets like this, the greater the chances that it doesn't actually recover. So this is what I'm watching closely. And it would be a big shame if it didn't recover, but I'm hoping it does. I still hold all my NTMPI. I'm still running all my nodes, still stacking a bunch of my tokens, but that is where that one is currently at. And rounding out the crypto portfolio to go through my top 10 positions is Rover. I've had the Rover team on my podcast before. They have a couple different sensors that go into cars. They've got a big LiDAR, well, not big, it's actually pretty small and cost-effective LiDAR system that goes on cars. They also have a smaller one that does a much smaller data set. But they're taking this road data and this mapping, this real world physical mapping data, which is highly desirable for autonomous car training and AI applications. And they're capturing this. It's a unique data set. It's an in-demand data set. Rover's pretty new kid on the block, but they have made about $800,000 in revenue in the past year at a $600,000 market cap. I feel like this is deeply undervalued, but we'll see. It could always go lower. Everything, crypto is risky, but just based on what they're doing in DePIN, making real money, incredibly in-demand data set, AI applications as well. This one is one that I have been investing in. So that is my crypto portfolio. And I do want to get into my stocks next. But before I do, I want to say that if you're in the world of crypto, if you're owning crypto, if you're buying crypto, you need to keep that crypto safe. And one of my favorite ways to keep your crypto safe is Tangem. I've covered them on the channel a bunch of different times. This is also not sponsored by them, but I did see that they have a limited time promo going on right now. If you buy one of their one wallet that's either a black or stealth wallet, then you can get the second one, any color collection or white or stealth or whatever, for 50% off. So not only are all the prices reduced at the moment, but you can also get that second 50% off deal, which is a pretty big deal. Tangem is one of my main wallets. I hold a bunch of stuff in Tangem. I love it. The app is great. I use the swaps in the app all the time, and it's a super convenient wallet that's also not going to break the bank. It's not very expensive, especially now with this deal going on. And there's a link for that in the description. And if you use my promo code, you do get the cheaper prices, but then I believe you also get a $10, right here, $10 BTC reward when you get it. This is valid from right now until June 5th. So less than a month to grab this deal. So definitely go check that out. And then real quick, I'm going to run through my stock portfolio because people do ask me about this, and I do have a substantial amount, not nearly as big as my crypto portfolio, but stock market is hot right now. Everyone's talking about it. Well, maybe not today with CPI data out and everything crashing a little bit. My biggest position by far is VTI, the Vanguard Total Stock Market Index Fund. This is, if you could pick this or the S&P, this is just the entire market instead of just the 500 biggest companies by market cap in the U.S. stock exchange. So this is my biggest position. The reason is I don't have to think about it. I'm just investing in the U.S. economy and market and companies. It's a long-term proven performer. So that's where most of my stock money goes. My second biggest position, though, is Cypher Digital. I've been scaling into this year. This Cypher was Cypher mining. They were primarily a Bitcoin miner that has now pivoted into AI and data center infrastructure. One of the problems with building data centers right now is it's hard to do because everybody wants to do it. So a lot of these Bitcoin miners have been pivoting very successfully into offering that infrastructure. Cypher is one of them. They happen to be a bit undervalued compared to some of the other ones, in my opinion. So I've been scaling in. They have a ton of available power infrastructure ready to go. So for those reasons, I have been investing in it. Next up is Nvidia, because AI. You'd have to be, just looking at their trajectory, to be foolish to not be bullish on Nvidia at this stage. My next largest is the Sprott Uranium Miners ETF. I am long-term very bullish on nuclear energy. I think it's inevitable. We'll have to start building nuclear energy again. So I've been scaling for the past several years into a uranium ETF with the expectation that one day when that happens, these ETFs will go up. In the stock portfolio, next is a strategy, MSTR. And the big reason here is because this is leveraged Bitcoin. When Bitcoin goes down, MSTR goes down faster and harder. When Bitcoin goes up, strategy goes up way faster and way higher. It's like leveraged Bitcoin. And I have been buying, I have a bunch of MSTR in 2 HSA health savings accounts, which if you don't know what those are, you should go learn about them because they are deeply underrated investment vehicles and you can invest within them. When you sell and buy, it's all tax-free. It's basically like a kind of a Roth IRA. There's some different restrictions and stuff. Both of those, my HSAs are in MSTR, so that when Bitcoin flies and MSTR flies, I can cash out without the tax burden. Then there is QQQ in my portfolio, which is just a bet on tech in the US markets. And then next is Solana, which again, Bitcoin mining pivoted to data center infrastructure, AI infrastructure. This is the company behind at least one of Compass Mining's new very nice facilities, Bitcoin mining facilities. Now they're kind of trying to do as much as they can in the data center space. This is a super risky one because it's so small in terms of market cap and price, but also there's a lot of dilution happening because they use the stock like an ATM to raise money to build stuff. This is a shorter term play for me, but this was one that could in a single week double in price or something. and I'm bullish on AI and AI infrastructure. And then lastly, in the stock portfolio is Coinbase, which is the only position I'm currently looking at that I'm thinking I'm probably going to scale out of in the near term. I'm reasonably bullish on Coinbase long term and bullish on crypto, but I just think my money would be best spent somewhere else. So that is my crypto and my stock portfolio, what I'm holding right now in 2026, and some of the moves and ways I'm thinking about playing the rest of this year going into next year, looking for the next Bitcoin and crypto bull run. One of the things I covered was my tax advantage strategy for buying something like Solana. You should definitely watch this video where I go into way more detail about how that works. Or if the part of the video where I talk about making $4,000 to $5,000 a month mining Bitcoin is interesting to you, then watch this video here where I talk about what I'm doing right now, the most recent Bitcoin miner purchase I've made in my entire history of mining Bitcoin so far. Goodbye.